This is a very interesting phenomenon, and this is new, so it's really interesting. Go ahead.
Hi, good afternoon, learning colleagues. I am Philip Umusheko, and today we are going to be discussing a very fascinating topic, which is the subject of stablecoin and its future. Okay, money has evolved over the centuries from its earlier form of barter system where people exchange value for value, goods for goods, services for services, to metallic money, to paper money, and now to digital money. Now imagine we have a form of digital money where a form of digital money that keep its value stable, and yet it can move around across the world within a second, just like sending WhatsApp messages or WeChat messages. And that's what stablecoin promises. And today we're going to be exploring how stablecoin has been transforming the financial landscape and what it means for international trade. Next slide. So for this presentation, I will be looking at why stablecoins matters in today's financial landscape, and then to understand how stablecoin fits into the evolution of money. We're going to go the history lane to actually understand how money has evolved over the years. Over centuries. We're also going to be looking at try to understand what stablecoin is about, look at the definition, its features, and the importance. And of course, we also try to look at the types and examples of stablecoins that we have. And then of course, we also look at how stablecoins can transform global transactions. We look at the challenges and risks with stablecoins. I also try as much as possible to review existing literature on this topic to know what research has said about the future of stablecoins and what it is capable of. And then of course we look at the future outlook. Alright, so why does stablecoins matter in today's financial landscape and in international trade? Of course, the financial landscape is rapidly evolving with the rise of digital currencies. New opportunities are being created, and there are a lot of challenges for global commerce. I guess I might be obstructing some people. All right, so the stablecoin, of course, is a bridging ecosystem. It's connecting traditional finance with the cryptocurrency market. All right, so I wouldn't like to bore us too much with a lot of technicalities at this point, because I'm actually still going to explain what stablecoin is so that I can be sure that all of us are on the same page. And of course, the stablecoin has been causing a lot of global disruption. It has been reshaping cross-border payment and financial inclusions, which are some of the benefits of stablecoins that we're going to explore as we dig deep into this topic. And of course, stablecoin is also helping policymakers and investors to actually predict the future. All right. According to Bank for International Settlement in 2003, it was said that stablecoins is capable of transforming the way money moves around the world. Next slide. So, like I said, to understand how stablecoin fits in, we would like to quickly travel the memory lane to understand what is the historical background of money, how has money evolved over the years. Many of us know that the earliest forms of trade is the barter trade, the barter system, where goods are directly exchanged for goods or goods for services. In other words, or simply put, it is a system where values are directly exchanged for value. Take for instance, you have some grains of yam and you need beans. All right. Under this system, there was nothing as money as we have it today. But what happened at the time is you would have to look for somebody who has what you need, and is willing to exchange for what you have. That's the barter system. Goods or values are directly exchanged for values. But of course, there's a problem with this system. And one of the major problems is the problem of double coincidence of want, which implies that trade is very slow because for transactions to take place, there has to be what is called double coincidence. And what does that mean? It simply means that you will need to look for someone that has what you need and that is willing to accept what you have. And in most cases, this coincidence will take a lot of time before it can happen. Before you'll be able to, in most cases, you can get somebody who has what you have, but is not willing to accept what you have. So it can take a lot of time. And of course, because of the desire to look for a system that is more convenient, that is more faster and safer, of course, people have had to look for, or societies have had to look for other convenient systems of trading. And of course, I think one of the forms of barter system that have existed over the centuries is the fact that it's what we call commodity money. Systems where, different societies are using different kind of commodities as money. There's certain society that has used commodities like cowrie, like salt, elephants, and such commodities as money in the past. But those were not convenient because most of those commodities are not easy to carry about.
Due to time constraint, you could start from paper money.
All right, so paper money. So paper money are those government-backed currencies, right? Of course, before that we have metallic money. Those were, coins and all that. Because of how inconvenient that form of money is, it leads to the advent of paper money. And then we have what is called, today we now have what is called digital payments. Okay, you also understand that even with paper money, the moment it becomes too much, it is not easy to carry about. So that's one of the problems that's associated with that. And societies and humans will continue to look for something that is more convenient and faster. So today we have, what we commonly have is digital payments or electronic transactions, which we're used to. We send money via our bank apps, we transfer, with our card and all that. So digital currency. And of course, as the evolution progresses, we have what is called cryptocurrencies. And of course, I know that the first thing that comes to our mind when we hear cryptocurrency is Bitcoin, right? And I'm sure a lot of us have an idea of what cryptocurrencies are. So, cryptocurrency is simply forms of digital money that are built and deployed on what is called the blockchain technology. All right. And today we are looking now. The major challenge with cryptocurrency, as we know, is the fact that cryptocurrencies are very volatile. So volatile in the sense that their values can change, can go up and down at a very fast pace. And of course, that makes it very, very unreliable to keep. And we know that one of the functions that money is expected to serve is that money is supposed to serve as a store of value. Money should be something that we can use to store our value. But what is the essence of a money that the value can go up today, and then within the next moment, in a moment you think you are you're a millionaire, and in another moment you think, what is the essence of that? So that is why we're talking about stable currencies today. The need to have a form of digital currency that the value can be stable, right? That the value can be stable, just like our usual paper money. Do you understand?
Yeah.
Next slide. Okay, so what are stable coins? They are digital currencies that are designed to maintain a stable value by being pegged to traditional assets like the US dollar, gold, or basket of currencies. So in other words, stable coins, right? They are digital currencies and they are pegged to traditional assets like the US. What it means is that If 1 unit of, for instance, USDT is an example of a stable coin. And what it means is that for every USDT, for every 1 unit of USDT that is built and deployed on the blockchain technology, there is a $1 that is reserved for it. I don't know if you get that. For every 1 unit of USDT that is built and deployed on the blockchain, there is a $1 that is kept as a reserve for it. So it's not like we are just going on the blockchain and then we are just deploying, coins, right? There must be an asset, an equivalent asset that is kept aside for it, such that at any point in time, that volume of stablecoin that is deployed on the blockchain can actually be retrieved in physical cash when it is needed. Do you understand? Right. So what are the features? So we should think about it. We should think of stablecoin as an online version of the dollar that moves across borders instantly, just like messages on WhatsApp. So what are the features of stablecoins? Like we said, the price are more stable. Unlike the other forms of cryptocurrency, stablecoins have price stability. And then, like I just explained now, they are backed by reserves. They are supported by assets. That's what I just explained now. Then, fast transactions. All right? Fast transactions, quick cross-border payments. Most of us know how long it can take for us to send money across border, across international border. Sometimes it can take days, take a lot of time. But with stable coins, which are digital money, the transactions can happen within seconds, very few seconds. And then, of course, blockchain platform, which is built on this decentralized tech. Decentralized tech in the sense that, now many of us know that our money, like in most countries of the world, there are certain kinds of money that when they enter your bank account, government agency would, especially when the money is coming for the first time in your account, government agency would investigate you for money laundering. They would be after you, right? So people are saying that, so you will be very careful. In fact, there's in some part of the world, there's a limit of financial transactions that you can do, right? There's a limit of financial transactions where we can do. Limit has been placed because there's a body that is regulating these systems. So they will tell you, for instance, in a day you cannot transact more than $100 or $1,000. But in the case of decentralized system, we want to take away those middlemen. We want to take away the government. All right, we want to take away those strict government supervision and decentralize it. So our regular financial system is a centralized system, but blockchain technology is a decentralized system, meaning that it's a system that is void of supervision from the government or by financial institutions. So that means you can do anyhow. You can do just as you like. So let's look at real world examples of stable coins. We have USDT, or what is called Tether. Of course, this is the oldest and the largest stable coins that we have. It is pegged to 1:1 to the USD. It is widely used for cryptocurrency. It facilitates cross-border settlement. All right. So the USDT is the grandfather of stable coins in the crypto ecosystem. Then we have the USDC. USDC. It is managed by a company called Circle. It is regulated by the US financial laws. It is used by fintechs for business payments, and then of course it has bank level security standard, and then of course it set the standard for transparent and compliant stable coins. And then of course we have governments are now beginning to, we also have government central bank CBDC, which is central bank digital currencies. Central banks of most countries are now beginning to go digital also. All right, so by building their own currency, the digital form of their currency on the blockchain. For instance, we have the Digital Yuan, which is built by the Central Bank of China. All right, so that is the digital form of our Chinese yuan, right? So it is issued by the China Central Bank. It improves payment efficiency, enhances monetary control, and it's an example of government-backed CBDC. CBDC simply means central bank digital currency. My country, Nigeria, also have their own e-currency. We call it e-naira. That is the digital form of our money. So this actually demonstrates how government can harness digital currency technology. Next slide. So let's look at stablecoins in international trade. So we're going to look at traditional cross-border payment vis-a-vis stablecoins cross-border payments. So as I've explained, traditional cross-border payments can take a number of days before you send. That is when you send money from your country to another country, it can take a few days for that transaction to be settled or completed. But with stablecoins, within a second, that transaction can actually happen without any constraint. So the traditional cross-border payment is characterized by high fees, but of course with stablecoins, lower fees. With traditional cross-border payment, we have multiple intermediaries. All right, so this is what I demonstrated here. If you send money, let's say you are here, you send money through Bank A, all right, which is in your country, let's say in my country, Nigeria, and it's going to Bank B in Switzerland. So the whole process will go from Bank A, Bank B, and maybe there's another Bank C, which is like the regulator, who also need to approve that transaction before it will eventually settle. Yes. Okay. So before it will eventually get to you here, so you see what I'm saying about the decentralization of the stable coins so but under this system, this is a centralized system. Sorry, again. So this is a centralized system, right? Whereas this is a decentralized system. So what makes it decentralized is that all these middlemen has been wiped off. So the money can go directly from the sender to the recipient, and that transaction can actually happen within a second. All right, so USDC enables businesses to settle international invoices in seconds, reducing settlement time from days to mere seconds. Next slide. So what are the key benefits? I've said this again and again. Lower transaction fees. It reduces foreign exchange risk. All right. So how? The fact that it is pegged against an asset makes it able to reduce foreign exchange risk. And then, of course, financial inclusion is something that blockchain technology and cryptocurrency has come to bring about. The fact that we can have access to foreign currencies, right? Now, I remember there were times in my country where to get USD, for instance, you need to, maybe you want to go and do business abroad and you need to exchange local currency to USD. You need to submit your application like a month or 2 months. They call it Form A. You need to submit your application like a month or 2 earlier. Let's say you need the money in January, you need to have submitted application and wait in the queue before it will get to you. But with cryptocurrency, you don't need to do that. You just need to get an exchange. For instance, Binance, where you could just go there, use a P2P platform, exchange your local currency directly for. So it brings about the advent of stable coins and blockchain tech and cryptocurrency brings about a lot of financial inclusion, and that we cannot overemphasize. Next slide. So what are the current market applications? At the moment, we can use stable coins to settle business invoices. That is, we can use it for to settle business invoices, that is to make payments. Cross-border payments, of course, I've said this earlier. Remittance system. Stable coins enhance remittance system in developing economies by offering faster and cheaper transfer options. The Digital Yuan, for instance, enhances payment efficiency and monetary control within the country. Next slide. What are the challenges and risks? The key obstacles facing stablecoin adoption. Number one is regulatory uncertainty. All right, so global governments are still defining policies for stablecoin, and this has led to a fragmented regulatory landscape. That is, a lot of countries, a lot of societies are still wondering what exactly is this thing called blockchain technology. Is it something we should consider in the future? Should we even consider this? Is it actually real? So there's still a lot of countries that still find themselves asking that question of whether it is worth, it is worth adopting. So I see there are still a lot of countries that are saying no to blockchain technology and cryptocurrency. All right, so another challenge is with transparency and reserve audits. All right. Remember I said earlier that for every cryptocurrency that is deployed on the blockchain, it has to be backed by an asset, right? So the question is, how are we sure that these assets are actually there? So some people are still asking that question, that how are these private enterprise that are deploying these stablecoins, how are we sure they are being audited? How are we sure that indeed these assets are actually there? So that these are some of the challenges that has made it difficult for some people to actually adopt cryptocurrency. And then, like every other forms of digital currency, there's also the risk of cyber threats, right? Like stablecoins faces risk including smart contract vulnerabilities. Right? I don't want to bore us with those technicalities. And then, of course, there's now a lot of competitions with CBDCs. Like I've explained, CBDCs are central bank digital currencies. So a lot of countries that are beginning to adopt this technology are now beginning to deploy their own stable coins, and there has been a lot of competitions with So what is literature saying about stable coins? All right, so I did a bit of literature review, and then I summarized some of my findings. IMF, the International Monetary Fund, in 2004 said, according to their study, shows that stable coins could boost cross-border payment efficiency by 30 to 50% if properly regulated. The Bank of International Settlement, BIS, in 2023 warned that unregulated stable coins could threaten monetary sovereignty. World Bank in 2023, in their findings, showed that stable coins can enhance remittance system in developing economies. McKinsey in 2024 forecast that stablecoin market could exceed 3 trillion by 2030. So at the moment we are sometime with the total market cap of stablecoin is somewhere between 1.5 trillion US dollar, and it is projected to get to 2 trillion by 2026, and of course 3 trillion by 2030. That's a projection. That's what projection has shown. Next slide. So, like I said, there are regulatory landscapes or global framework for stablecoin oversight to ensure that this does not go overboard. We have the IMF that is responsible for promoting international regulatory framework for stablecoins, and the projecting efficiency boost of 30 to 50% in cross-border payments. We have FATF, which are responsible for setting international standard for stablecoins issuance, focusing. Yeah. Okay. So next slide. Okay. I think I've explained this. I've explained CBDCs. Okay. Next slide. I've explained all of this. Sorry.
What is your conclusion?
My conclusion.
Yeah.
All right. So the key takeaway. Stablecoins serve as bridge to digital finance. They connect traditional finance with blockchain, enabling seamless cross-border transactions. Regulatory framework, the boost regulation and transparency has been essential for adoption and stability. Financial inclusion, like I've explained. And then the future of money is not about replacing the old, it's about reimagining how it flows. So in other words, stable coins are the future of money, and it is not essentially going to change the old form of money, but it is going to reshape how things work going forward. So here are my references, and if there's any questions.
No question.
Are you sure?
No question.
Yes, go ahead, please.
Do you think that stablecoins is valuable for the present and the future? And in your opinion, is it stable and reliable enough to be the future for international exchange and transfer?
Yeah, that's basically what I've been saying. And from some of the research I've done from some of the projections by renowned financial institutions of the world, like the World Bank, IMF, and all that, it has shown that if you look at the way money has evolved, you will see that it will keep evolving. And this is where we are today. So it is viable, it is the future of money, and it is true that at the moment, the adoption is still very low, but in a couple of years, as evidence has shown in research, we'll see more countries and more people adopting the blockchain technology. So I would say it is viable. Thank you.
Anything? Any other questions? No? Okay.
Yeah, it's good.
Thank you.
Thank you very much. So, I want to add one point. That is, you can leave it open.
Okay.
Because I want to